Patience, the key to a long-lasting relationship and a hell of a way not to blow up your damn portfolio, especially in the market that we are now experiencing. The dead cat bounce is real. We are not recovering in the correctional period that we are currently living in here, folks. And we got to break this down with my stocks, but I've been getting absolutely wrecked on. But we got to talk about these Canadian dividend stocks because, my God, the Canadian government here is in this wicked liberal versus conservative debate on who's going to get the best tax cuts in this upcoming election. And a lot of it has to do with your portfolios. And we're going to talk about the next one in this live stream. And of course, your Q&As, because my God, there's been so much chatter in my videos as of late that I think there's some fun comments we can go over. But yeah, we're starting the market off here pretty red in pre-market. And usually I don't like to say this is an indicator to what the market open does, because typically this is like a fortune teller. And a lot of times pre-markets really don't indicate like the true movements. But when you're seeing the Qs, the NASDAQ down 1.3% in pre-market already, something tells me there's a pretty good warm-up that things are going to be pretty heated to the red side, considering how damning Friday was. I mean, we didn't even get a slight bounce for a lot of stocks into the end of the day. Google, one of the largest positions in our, my portfolio here, is not doing that great. I mean, it's funny reading some of the comments here. Wait for 140, big shit show tomorrow, and it's another day in paradise. Jesus, the DAQ is down 1% pre-market. Rest in peace. Oof, lot of red. Americans 401k is dropping again thanks to your dictator. When I'm going through this watch list, man, on Friday it was absolutely insane. Honestly, like I said, I kind of get more excited when things get red, and I'm noticing some really funny comments, and I think people are kind of, newer investors are kind of getting used to that sense of this is when you get most excited about stocks. The problem is I threw a lot of money in the market already. I still got some cash and I'm getting paid this week. I think it's going to be a good week to keep buying some of these dips, and I hope they continue to persist. But I mean, Google's wrecked 18.5% this year and is now back into the 19 PE level. Now, this kind of blows my mind. I think they just did pay $100 million fine or something like that. None of the news is material enough to drop it. And, they do have their court case for the monopolistic stuff coming up in April, I believe. I'm not sure. I think this is just part of the market fear, recession fear. Again, when it comes to ad spend, it's the first thing that people cut. So in fears of, markets like this, the stocks that get hit the hardest are unfortunately companies like Google and Meta, right? I mean, this comment's hilarious though. I have $1.4 million in Google stock alone at 163.5. Anytime you have pain, think of me, baby. Think of me. And I'd like to think that he's lying, but I know he's probably not, because I do know some people that have some absolutely absurd sizable positions. I need to fix my lights back here. Right, there we go. I got to make it nice and dark. My one light wasn't mood lighting for me here. Mood light, not mood lighting. Scooped up some Google, a tiny bit of Nike, SCHD. Yeah, I feel like, I think the wife's messing around with the light. She's probably getting annoyed. It's the same remote. Works for both the lights. Shh, let's see what happens here. Let's try this again. Are you ready? Watch this. Shh, we'll see if they flick back, and I know she's messing with them. ARK is a junk law. Kathy, thoughts, Enbridge and ARC resources. I ran out of money to buy Goog. I keep buying the dip. It keeps on dipping and dipping. I have no more money to put into it anymore. Yeah, it's kind of to that point, right? I don't know if I'll buy more here, because I did buy more, I think, in the ones. What was the last buy I did? I think I showed you guys. I can't remember what the last buy was. It might have been somewhere up here in the 160s on that last little bump that we kind of came up to, but I'm not too sure. But our position's fairly sizable. It's really weird because honestly, my most speculative positions and the ones that I thought would have pulled back the most are the ones that are actually holding on the strongest, like Take-Two Interactive, that was able to hit all-time highs during that dead cat bounce and has been really holding strong here, which is kind of a shock to me. Along with TELUS. TELUS took quite a bit of a material dip from the rally that I had since the beginning of the year, but it's still holding up quite nicely on the year. And honestly, if the indexes like VDY continue to fall a bit more substantially, I might consider even trimming this just to put it back into VDY, because I still want to get 100 grand in VDY being my primary goal. But for right now, I mean, TELUS is surprisingly holding up quite well. But rounding this conversation off to the Canadian side of the border here, and this new promise from the Conservatives saying they're going to defer tax on capital gains to boost domestic investment. And this is a fascinating concept. And I'm not sure how deep this really goes because we were talking about, again, some of the technicalities behind, firstly, the $5,000 top up for the TFSA and how that exactly gets monitored or what the qualifications are. And it's likely they'll be qualified Canadian dividend stocks or ETFs. But when it comes to capital gains as well, this is also a very interesting take on what it means if I sell like a US stock in my portfolio, let's say for capital gain, and it's not in a tax advantage account. Can I defer the capital gain and then go put it into a Canadian investment? I mean, this is something that would directly apply to my corporate account because I have massive gains in the S&P 500 and some other stocks that I just don't really want to sell because I don't want to have to pay any gains on it in my corporate account that is directly tax implicated. But let's just listen to this because this is the ad that they are now running. And it's just, it's something that's just kind of intriguing all around. But let's just take a quick listen here. Let me screen this up.
A proud local manufacturer has a big piece of vacant land it doesn't need. They'd love nothing more than to sell the land to a home builder and reinvest the proceeds in the state-of-the-art Canadian factory. Machines roaring, workers clocking in, paychecks flowing. Canadians get the homes they need. Workers in this factory generate more economic output, driving up their wages and create...
This is just some example, right? It kind of reminds me of like a 1031 in the United States because it's not like, again, it's tax deferred, which I think is something prevalent here. I don't think it's tax free if you just turn it over. It's just, again, like we're going to defer the tax on the capital gain that you got so long as you reinvest it into Canadians, right?
Creating even more jobs. And both companies can turn a profit, paying more taxes for social programs. Win, win, win. But there's a big problem. Wham! The capital gains tax would take a big bite out of the sale of the land. So that local manufacturer decides not to sell it to the home builder. And instead, the land sits vacant. The homes don't get built, and the proceeds of sale are never made available to buy all those machines and hire all those workers.
Political
that
get to
is
the
what we
point.
call the lock-in effect. Bad for investors, worse for our economy. It blocks our businesses from growing, stifles innovation, and keeps us dependent on the U.S. And because investors pass up on selling the asset, they don't actually earn a capital gain, and ironically, the government doesn't collect any tax at all. Lose, lose, lose. Now, I've already told you that I will reverse the liberal capital gains tax hike.
Here's what's funny about the liberal tax gain hike. It actually has never gone into effect yet. It's something that hasn't actually happened because I think they were raising the marginal rate from 50% to 63% or something like that on any gains, capital gains over 250,000.
Hike. But I will go further. Today, I am announcing a plan to unlock billions of dollars in reinvestment to build Canada into an economic fortress against American threats. I will axe the tax on reinvestments in Canada. Here's how it works. Anyone who sells an asset will pay no capital gains tax on whatever proceeds they reinvest in Canada. People can choose to reinvest.
Okay, so maybe I was wrong. Maybe it's not tax deferred, but here comes the other convoluted thing, right? Like how long does that investment have to be locked up for? Is it a month? Is it a year? Like if I sell $1 million gain in something and then invest it into Canadian real estate or invest it into a Canadian dividend stock, how long do I have to hold that dividend stock before I can sell it and completely waive the capital gains tax, which would be crazy, right?
Invest into Canadian businesses, Canadian stocks, Canadian farms, Canadian home building, and other Canadian investments. Fully tax deferred.
That's why
companies will get this.
Here we go again. That's what I'm confused. Tax deferred. That's why I watched this and I thought I heard tax deferred. So you pay no capital gains tax, but no, it's tax deferred. So that, again, that locks the idea of if I do invest it in a Canadian, and this is pretty, actually, I love the concept of this because if you're heading into retirement, it's a really fun way to mess around with your money, not pay any taxes, or at least defer the tax into something that can pay a dividend or a higher yielding dividend in the Canadian economy, perhaps, where you can bolster your income and literally not worry about paying the tax and just try and keep it locked in where you don't have to sell it.
The same tax deferral on any proceeds of sale they reinvest here in Canada. Canadians will only pay capital gains tax on accumulated gains when they cash out for good or take their money out of Canada.
Yeah.
This tax break will be available for any capital gains reinvested between July 1st, 2025 to December 31st, 2026. But if it causes as big an economic boom as I expect, you know what? I'll make it permanent. The existing lifetime capital gains exemption for small business owners and farmers will remain unchanged, meaning they can benefit.
So we get the idea, right? Which is, again, it's quite fascinating, but it really reminds me of like a 1031 in the United States, where if you sell a piece of real estate, I think you have a month or two or something to turn it over into another piece of real estate and to defer the tax. However, this kind of reminds me of Ben Malla. People have to understand that this nature of investing is highly complex. And you got to be very careful about like how you set your will up, because it's one of those things where if your kids inherit the money or inherit the assets, or you ever decide to liquidate those assets, like Ben Malla, if you don't know who he is, he's like a real estate mogul in the United States. But it's like one of those things where you spent your whole life deferring taxes, that when you do liquidate all that, you have to backtrack all those capital gains over all those years, and you could end up losing like a huge substantial portion of your net worth. So it becomes one of these things where it has to be almost business mindset managed, where you never ever actually end up selling it, and it's a constant cash flow piece of generation for, it generates cash flow for generations of your family to come, because it would be insane to keep track of that over a lifetime if that is a true law that kind of comes into play here. And there's always some comments. I mean, this stuff is getting very political, and I'm going to tell you guys, I'm literally on both sides of the fence here. I kind of have a lot more respect for Carney than perhaps, say, Trudeau, but I get what Poilievre is doing, and there's a lot of distrust in the Liberal Party. My parents are pretty split on this conversation, as I'm sure most of you are, as I see it in my comment section. You can even read comments here that aren't as crazy, but I hope the Conservatives win. This will encourage me to save even more of my money to invest. I'm pretty responsible financially overall, but I know I still spend too much money buying useless shit I don't need. The problem is this $5,000 top-up will not interest a lot of people. Many are struggling just to make ends meet, so they don't have the extra $5K to invest, or more commonly just splurge and don't think about the future. The math is right there in your face. Compound interest is the strongest force in the universe. It's your ticket to an early retirement. And I will say that there's a few things I don't like about the way the government is kind of pushing all these tax cuts, because the reality is we have a lot of debt, just like the United States does. And it's fun just saying, oh, we can take tax breaks here and tax breaks there. But the reality is they got to make up for taxes somewhere. And, you might get a break here, but you're going to lose it somewhere else. And a lot of these policies pander to the rich. These aren't kind of policies that really pander, I think, to the average person, like this guy's saying. And you also have to keep in mind, like, this problem with real estate is kind of largely drowned it out to the fact that it isn't a government problem. Real estate, yes, they should loosen up some of the regulations on construction, but it is a free market product. And it doesn't care about your income bracket or what you make versus the value of that property over time. It is purely just supply and demand. Now, obviously, cutting off immigration and giving time for the market to catch back up to itself, and let the mess of the pandemic that bankrupted a lot of construction companies, especially in the interest-raised environment, the inflationary environment. There were so many things that caused the value of properties to skyrocket like they have, but I don't think it's a government issue to fix it, right? So, I mean, there's a lot of stuff that I don't like. Politics to me is just keep the roads, the schools, the healthcare system running good, make sure our deficit doesn't get absolutely ballooned insane, which, again, a lot of people want to blame the liberals on, but you have to keep in mind we went through a once in like a generation pandemic that was like, could have been so much worse, and they had to print money to bail it out, just kind of similar to 2008. It's like, could you imagine saying, oh, we should have just let the market collapse in 2008, not realizing that put us on a trajectory for growth unlike any market that anyone's ever seen ever? I mean, it spurred GDP growth like insanity. We could have just let everything collapse, and it would have taken a hell of a lot longer to get out of those problems, right? But it wasn't just a Canada-specific problem. It was a global problem, and all governments were basically doing it. And now we're dealing still with the whiplash of all that spending from the pandemic, right? These are very complicated topics, right? Get fairly confident. All the 51st state rhetoric was a way of forcing an election. It was clear after working with Trudeau for 4 years in his first term, Trump looked at him like an idiot nephew or something, had zero respect for him. I'm not a fan of Carney, but I imagine Trump can at least look at him as an equal from a resume perspective, perhaps. I don't really know. The whole political landscape's a mess. I want politics to go back to being boring. I don't think it is appropriate for presidents to be making memes or jokes or doing office the way they're doing it. I think it's kind of deplorable at best, especially when you have them pumping crypto coins and junk and all kinds of shit. It's the weirdest. This is the weirdest political environment I think many of us have experienced in our lifetime. Now, talking about the millennial generation, because again, I think if you go back far enough, I'm sure you've seen your fair share of shit, but I don't think, in my generation, we've ever seen something quite like this, which is quite interesting, right? Do you invest in crypto at all? Yes. I don't like it as an investment though. We do have a bit of Bitcoin. We have a bit of Ethereum, just as much as we have a bit of gold and a bit of silver, like just little bits. Like they're insurmountable, like they're insignificant compared to the size of like the wife and I's portfolio, and it's insurmountable, or it's insignificant compared to even the size of the real estate, the value of real estate that we hold as well. I like productive assets. I do not like non-productive assets because I look at gold as one of the most manipulated assets on the planet, and crypto is pretty much on its way there if it's not already. I mean, these assets have no underlying thesis behind them. And I say this, you have to understand, like, I think banks globally have been bolstering the price of gold to regain asset values in their balance sheets, because there's an unlimited supply of gold. I don't care what anyone says. It's not a limited thing. It's everywhere. They found like $1 trillion deposits in India or something. Like, the amount of gold deposits that are out there, a government could incentivize to mine more gold and make it easier to mine it. And they could lower the they could oversupply it and wreck the demand supply up a bit, and it would bring the price down significantly. I'm just saying, it's the same thing with crypto. Like, what happens if all the whales decide to sell all of a sudden? Like, I mean, you'd be in a massive different crypto market. It's very weird. I do not like non-productive assets. I like things where I know it makes sense. You go out, you produce something people use, housing, oil. I mean, I don't like oil stocks, are a bit more commodity based as well, but the business of producing the cash off that oil, or even gold miners, to me are more valuable than gold itself. Let it consume you, Kyle. Give in. Vote Pierre Poilievre. Lol. Politicians are all clowns. Yeah, like, I'm a influencer clown on the internet. I grew up as an entertainer. My whole life has been theater. And like, I just look at political theater as a bunch of bullshit. Like, all they do is just lie. I mean, look at Trump. He lied his whole way into office. Oh, we're going to lower inflation, and I'm going to end these wars with one phone call to Putin. And it's still an absolute calamity. Oh, it was more peaceful under Trump. It's like, okay, I'm sure Trump was the whole reason the world was peaceful. Yeah, right. Is it really that more peaceful now that he's in? It sure feels that way, doesn't it? Lie worse than a lawyer. Literally, they're just con artists. That's why, like, I don't understand why people get so invested into it. It's like, they're not going to your job. They're not putting food on your table. I've never looked at my retirement being like, that guy that I'm going to elect is going to be the reason I get to retire. Like, I don't think anyone's ever said that. Regardless of the election results, I hope Canada focuses on building greater self-reliance and reducing its. Yeah, but here's the thing, right? I think that's true. First of all, the government needs to loosen regulations. And again, this is what the government should be for. Let's look at, rebuilding trade partners, interprovincial trade, all this stuff. I think it's healthy, actually. And I think Trump's actually maybe done something that's better for our economy in that sense. But when it comes to even like the problems, I'm hoping people kind of get a little bit ignited to realize that, like, fix it. Like, we can fix it too, right? Like, if there's problems in the economy, like housing, like, there's clearly some supply and demand issues. Like, go get involved in housing. Like, you go get involved in construction and labor jobs that are highly needed right now. Like, I keep hearing, this is a fun little anecdotal story, and then I kind of want to get back into some of the topics here. But there's a lady downstairs that manages the amenities here, and I think I brought this up before. She's from Nepal, and she was talking about just the struggles of coming over here on a student visa. She's been here for 2 years, and she had this idea that she could just get a job and, she'd actually be able to support herself and go to school, but she can't. It's really expensive here. She's struggling a lot, and it's nothing like she thought it was going to be. And I just thought it was really interesting, because I've talked to a lot of people in school right now too about the jobs they have, and they're looking for co-ops and trying to find places of employment, and they're struggling. And everyone keeps saying the job market is so tough and it's so hard out there. Yet in my job, there seems to be an insane amount of abundance. Like, I've got a great amount of work. The work I'm doing is busy. I'm talking to people like my dad in construction that is still really busy. Like, they'd still employ people. I'm going to, restaurants where they can't find, and I know the restaurant thing I've heard mixed debates about, but like, I just went out for pho with my wife, and we were just sitting there talking to him, and they just fired an employee, and he couldn't figure out how useless she was, considering she came over on a student visa. And it's just like, he's like, she didn't even seem to care. And I'm just like, it's so weird, because I hear so much complaining on one side, and then on the other side, I'm like, there's still all these problems that need to be solved, all this abundance, a lot of people making a lot of money. I'm always so confused, because you go to where the demand is, right? I feel like people are just missing the supply and demand, and understanding that, like, yeah, life isn't this dream where you can just do this paradise job that you like love. Like, even I love my job, but some days I don't love it. When I was a full-time magician, I didn't just love being a magician. It's a job. When you take something from a hobby into a career, it's a job. It's no longer this just passionate thing. I'm grateful that I could do it, and I did enjoy it. Don't get me wrong, but a job is a job. You go to where the supply and demand is, and you do what you got to do to, get by in life. So I'm hoping people can figure some of this out and help fix the economy themselves and start filling in the holes that we have issues with. because that's usually how the market tends to work. The market will show you where the money is. It's just a matter of, do you want to go and get that money? That is the question, right? But getting back into it, there is another fun comment here. Is this, if you were starting out, which of these ETFs would you suggest? I have some XEI and XEQT, and this is one of like the most convoluted questions ever, because I'd be a hypocrite to say just buy XEQT and not like individual stocks. But as somebody that literally made almost all their gains, like the massive amount of gains that I tend to gloat about, all came from like individual stocks. And it really depends on whether you have that conviction in the market and you can handle and stomach that volatility. If you have the time horizon, I mean, do you have the income? Are you more focused on work and long-term time horizon, investing in indexes so you don't have to think about it? Questions. We all have questions, but I can't give you the answer. That's why it's personal finance, baby. What do you think of Divo, D-I-V-O? I am looking into it instead of adding more to my SCHD, which in my opinion has made some suboptimal moves in the past year, e.g. dropping AVGO right before it went to the moon. Now, SCHD, I'm not the biggest fan of them investing in the oil sector like they have been, because I feel like oil's peaked a bit now that oil prices have come down. And honestly, I do not talk about covered calls all that much because I feel like they're more of a retirement play. But let's actually do a quick comparable here and get a better understanding of the return of these two investments, because honestly, they're both great investments in my opinion. And there's probably one of the few option ETFs that I like because it has such good performance behind it. But the reason I don't think people hear about Divo as much is because unlike many other option ETFs, guess what? It doesn't pay a huge dividend yield. Oh no, it's like an option ETF that pays a reasonable dividend yield of 4.78%. Heaven forbid. What are we to do? Every time I hear of option ETFs, people are throwing out like 8 to 12% yields. They always underperform the market. This one, however, is actually very reasonable. I like the format that they have. They invest in very great companies that are highly diverse. Top 10 holdings: Visa, CME Group, Caterpillar, JP Morgan, Honeywell, Microsoft, Goldman Sachs. If I were to poke a little bit of fun at it and say, like, what are my issues with this? Just like energy with SCHD, my issue would be also like SCHD is they have large exposure to financials, which financials do very well in a high interest rate environment, but we might be heading toward a lower interest rate environment soon where financials might not be doing as well as they have been in the past. We've seen that with JP Morgan and some of the stocks that are upper weighted in here, but nonetheless, great ETF overall. If we look at the fund NAV total return here, annualized over 5 years, well, since inception, let's just say it's been about 12.24%. If we do the same comparable to SCHD as an example, SCHD has a NAV of 13.12% since inception. Over the 5 year, about 14.66. I think these are annualized. I wonder if these are dividends reinvested. I'd have to double check. But the returns over long periods of time are actually pretty equatable between these two ETFs. They're both great. You could pair them together, if anything. I don't think there's anything wrong with either or, depending on what your goals are. If you want dividend income, there's nothing wrong with a covered call strategy ETF. Again, you do got to keep in mind, there could be some comparable difference too, is the fact that this ETF is charging you a 0.56% expense ratio, which is substantially higher. And it's usually at my breaking limit because SCHD is only 0.06%. 0.5% is pretty high in my opinion for an expense ratio. Usually my breaking limit is like 0.3%. But once you get into the 0.5 to 1%, it's not the end of the world, but it's usually just, I'm usually not the biggest fan. But again, they're both great ETFs. I think they're both really good, really well managed. Remember that you will be taxed when you withdraw money from your RSP, as well as pay income tax and provincial tax on that money. Thus, you are deferring tax, not avoiding them. Yeah, you got to keep in mind that these are better investments. Like SCHD for me, I hold in my RSP, and I put it in there because, again, the dividends don't have the 15% withholding, but I understand that when I pull that money out, I'm going to get taxed on it, but only at my marginal rate. That's it. I mean, so if you're in a low income bracket and you want to pull some money out, the dividends and capital gains are tax free. And then you just have to pay your marginal income tax rate, which is not that big of a deal, in my opinion, considering up front, you get to refund the money that you pay tax on with whatever you put in that RRSP. Beautiful account, very misunderstood. When I talk to people about the RSP, they seem like they hate it. They think it's a scam or something. They think you get penalized and this and that. But really, it's probably one of the most beautiful accounts out there, right? Not sure. And again, unlike the US as well, let me also state this. Unlike, I think it's a 401k Roth IRA, you don't get penalized for withdrawing early either. TFSA and RSP, you can draw whenever you want from without getting penalized. It's a beautiful thing. Before I deep dive into some other questions, let's see what you guys are doing. Hey, Kyle, can you explain the benefit of dividends? I don't see it. There is no real benefit, in my opinion. However, I will say that we could go back into a market. Let me just show you real quick, because I think people get attracted to dividends because they live through an era that we really haven't experienced in our lifetime to a major extent, which is obviously like a real crash or a real period of lull. Like if you look at that's not a good. Let me pull up SPY because I think SPY has a longer track record than VOO does. Yeah, if you look at like the chart on SPY, for example, the reason that you might want dividends is because companies can still generate cash flow and pay very consistent yield during a very rocky market period. And you got to imagine if we're living in an era that's similar to the dot-com bubble, which we very well could be, because I mean, price to earnings multiples are very high. The market is growing very fast, but it deserves a higher multiple. But that doesn't mean we can't see like growth slow down and those multiples start to compress. But you got to imagine that from 2001 all the way to 2013, you saw no capital gains in the S&P 500, and the yield is not that high in the S&P. And I like holding a balance of income and growth, because when the market does go into a shitty environment, like again, like even it did that recently, right? Like from 2021 all the way till 2024 here, the end of 2021. So say 2022 to 2024, you had 2 years of no growth in the S&P 500. This was a very bad time for growth stocks. However, if you were collecting income, it was really nice to have that income to reinvest. Because during that time, like let's do a quick comparable here. If you were holding something like I was, like SCHD, over that 5 years, you can see SCHD still went down with the market, but its dividend was actually increasing during this time, and it was still paying out a really high dividend yield. Let's even compare it to say like VDY. Was VDY doing any better during this time? No, so you can see the market can pull the whole market down, right? So all stocks will drop when a market turns, but at the end of the day, like those companies might still generate the same cash flow and still pay the same yield. This is why I think Dave Ramsey like says you want to focus on those buckets of like growth and income. I like keeping balanced. Our average yield tends to be between 2 and 3% on our total portfolio, but I do believe total returns matter more than dividends. That is just my personal opinion. I am not just a dividend person. I used to be a little bit more inclined to think dividends mattered that much, but they don't. It's just like even my parents in retirement is a good example. Like when we go into these downturns, like when my parents are sitting there and they have to rely on cash flow, yeah, everyone's like, you could just pull shares off the stocks. But what if you go into a market environment where your stocks are down 20%? Well, it's really hard to want to sell shares, right? But if you're collecting enough cash flow to pay your bills, then great. So this is why even with my parents in retirement, I said, look, like figure out what you need to cash flow to pay your bills comfortably. And then with all that extra money, let's not focus on dividends. Let's focus on growth, because in periods where the market's exploding, you're going to see a much higher return, at which they did. And then they took some gains off the S&P. My mom even bought a car. So it's just like, you can take advantage of both. That's why I don't think you should be narrowing into one thing like you see a lot of investors out there do. But it really depends on your personal risk tolerance. If you're young, growth might be more of something you're inclined toward, right? A lot of options out there. What else we got? But when the market's flat, you depend on what someone else is willing to pay for a stock, which isn't always a rational price you deserve. Yeah. You want to have a balanced portfolio. I think this is why like global market ETFs are good, because the yields tend to be more in line with even where my portfolio is at like 2%. But yeah, and anyways, what else we got here? Maybe a couple more comments and I'll get into some other questions here. A lot of investment into Tesla is based on its promise of the future products, which are just in a conceptual stage right now. But that's a lot of the market too, right? I don't even think it's just Tesla. I think when you look at like most of the market, when it comes to, AI stocks, like the AI bubble is kind of correcting right now. This happens all the time. The markets highly are dependent on what the future expectations are. That's why like guidance seems to matter so much, even though guidance is kind of fugazi to some extent. And speaking of fugazi and guidance, I noticed some of you have been overanalyzing my stock investments. And I want to talk about why past performance doesn't equal future returns, because this is also a great example. And actually, most stocks I made a fortune on, including Tesla, had nothing to do with the current valuations of the company. This is where things also get convoluted. Not sure what you see in Take-Two Interactive. First glance of it, I see every metric absolutely the worst. Negative return on investment, declining margins, declining revenue, high debt. I like GTA too, Grand Theft Auto, but I wouldn't touch this company, or maybe I'm missing something. Good luck. So here's the problem, right? And it's fun to be a YouTuber and sit here and just look at the past. But everything, I'm telling you, everything I have made unicorn-like money on, I've been very fortunate to catch a couple unicorns, had nothing to do with what the company was currently doing. Nothing to do with the past performance, because you have to be able to look into the future and say, hey, where's a one-to-one correlation? For example, great correlation. Oh, interest rates are going up. What companies will benefit tomorrow on the back of interest rates being up? Oh, maybe companies that have a lot of cash. Oh, insurance companies. You could have went and triple leveraged up, took out some options play on some, anything to do with insurers, and you would have made a fortune. Insurance companies have been printing. Same with a lot of the major banks, Berkshire Hathaway, anybody that's sitting on a huge amount of cash. They are printing, right? So you got to understand, you couldn't look backwards and presume that was what's going to happen in the future. So when it comes to a company like Take-Two Interactive, again, this is why it's a speculative bet for me, because I'm speculating on the future, presuming the past has nothing to do with what is going to happen tomorrow. And here I'm looking at a company over the 12-month, generating around $5 billion. We'll just take a look at the 9-month though. So $4 billion over the 9-month. Gross profits about 2.2. So let's say over a year, they're generating gross profit of about $3 billion. So before the internal expenses, $3 billion, that's not too bad. So they're trading at like, their market cap's around 30, 40 billion. So they're trading at like 10 times gross profit. That's not like the worst metric in my opinion. But obviously if you take a look at the operations, they're spending a lot on selling and marketing, research and development, general administration, depreciation costs, all this crap. So they're losing about 614 million over the 12 or the 9-month. Like they're losing money. And if we just take a look, say for example, on macro trends here. Yeah, I mean, here's a company that's generating pretty consistently 5 billion. If we take a look at the earnings per share, they've gone negative because the company's spending, more than they're making right now. And you might say this is a horrible company, right? But I'm looking at a company here where I think that they're going to be able to generate somewhere between $5 and $10 billion off GTA 6. So if we're going to presume that they're already going to make about $5 billion off, their current revenue, and off that revenue, they're only able to generate, they're losing 614 million. Well, they're very quickly going to go from losing money, if I'm right, to, adding an extra 5 to 10 billion, which is going to bump this up probably to about anywhere from 3 to 5 billion in profit, which means they're going to be trading at about a 10 times multiple. If they can start generating, 3 billion in profit, that means their price to earnings multiple will be right around 10. And something tells me this isn't a company that trades off general, a 10 price to earnings multiple. I think they're going to go into a phase of insane profitability. I think their revenue is going to jump up somewhere between 10 and 15 billion. It's going to double. And this is me speculating. This is just me speculating, right? And I think the hype that that's going to bring is going to balloon the value of this company somewhere closer to a 60 to 90 billion dollar valuation. Now, I could be wrong, obviously, but I did the same thing with like the Canopy Growth Corps, the marijuana industry. Like, if you go look at Canopy Growth Corp when I was buying it back in like 2014, you'd be like, oh, it's a horrible company. They don't make any money. Marijuana is not legal. Like, what? And I was like, well, they're going to legalize it. So, the largest marijuana producer that gets to be the first at the gate when they legalize it, the hype that's going to bring and the money that's going to bring is probably going to propel the stock to the moon. I mean, that's kind of like, that's where you get rich in the stock market. I'm going to tell you right now, you're not going to look at a past performance balance sheet and be like, oh, I'm going to make 1,000x return on this in the next year or two. That's not going to happen. That's not how it works, right? So if you're like me and you want to catch those unicorns, you want to double your money quick, this is what I do with parts of my portfolio. This is why I think the YouTube channel is entertaining, because you guys have seen me do this with Tesla. I've done it with MindMed. I've done it with a bunch of companies over the last 5 years. I've been running this YouTube channel, and it's made me several $100,000 over the years, right? Again, this is something you can do with a part of your portfolio. It's not something I recommend doing with your whole portfolio. I wish I did do it with my whole portfolio because I'd be way better off. But at the same time, you only make one mistake and it's all gone. So I've been really good at due diligencing and making sure that I'm diversified. Are you holding any BTC still? Yeah, I got some Bitcoin. I don't care what Bitcoin does. I'm holding it long-term, but I don't give a shit what it does. It's one of those things where I'll probably forget that we even have it. And if we're not idiots, we don't lose the wallet keys, because our keys are somewhere. Remember to hit the like button. Kyle works hard on this channel. I do appreciate that because I also have a full-time job. So I managed to keep posting like 3 or 4 days a week into these live streams. Cash is king, but PFE is king over cash. What do you mean PFE is king over cash and any other company which people need drugs to help in daily life? Yeah, I found it was really interesting that Pfizer was actually removed from SCHD because the fundamentals don't look terrible on it right now. Like if we pull up Pfizer real quick, I do like the healthcare space overall, but I don't understand it. So I don't care to invest in it because it's a space that I'd rather get through an ETF. Again, this comes back to the point, like how much do you know about healthcare? Because I don't know shit. I understand video games. I think I understand Google because I work for them basically. But I don't understand healthcare, right? So I try and avoid it. But I mean, this is a company that isn't trading necessarily cheap. But if we just take a look at the macro aspect of this, I was really curious to why, though, because I thought it was a pretty reasonable company and a lot of people like it. So when it got removed from SCHD, I was kind of blown away because the revenue is starting to recover a bit here. We take a look at the net income, and let's just see what's going on in the net income. Yeah, their net income is starting to recover. Earnings are probably starting to recover. It was such a weird time for them to remove Pfizer, but maybe the dividend metrics or something's changed. I mean, they're not really diluting. They do look like they're on a path to recovery, right? Gross profit margins are starting to recover. Like, yeah, everything about the metrics of this company, are saying that we're heading back to a good place. So it'll be neat to see what happens, right? Be real neat to see how that goes. I think people had PS4 and PS5. Ryokan stock still looks interesting. It seems near the bottom. Yeah, Ryokan went through the Canadian real estate in the retail side. They just saw, I think 3% of their portfolio just got fucked because Hudson Bay just went under, right? So you got to be a little careful with that. Intel event tomorrow, stock will rise. Have you seen Kevin O'Leary's ETF? I don't like Kevin O'Leary's ETFs. I've looked at them in the past. I'm not the biggest fan. I haven't looked at them recently. Hey, man, love your vid. Just want to say hi while I'm cooking food. Appreciate you watching me. You're doing some late night cooking, brother? Or are you in a different time zone? But when anyways, I am cooked if my portfolio is basically 45% SCHD and 45% VOO, small account. I don't know how young you are. I don't know if I'd be that comfortable putting I'm mostly the US with SCHD and VOO, but I do like diversifying a bit more. That's why I'm starting to buy XEQT and I have a bit more VDY. I don't know if I'd want to be 100% United States, maybe earlier on if I was looking for that growth, but later on, I'm starting to appreciate the global diversity a bit more. You can buy ZSP instead of VFE. ZSP tracks and holds the S&P 500 directly, unlike VFE, which is a wrapper. Yeah, I think somebody up here was asking about CDRs, and maybe I'll finish up on this if I can find it. But somebody was saying, can you explain the difference between like the CDRs of Google and just buying Google stock directly? Now, I will say, I think CDRs are just a way to attract broke people because they make let me look it up real quick. For those of you that don't know, CDRs are like these Canadian tickers for like US stocks. So if I look up Google, for example, CDR, and I think CIBC offers them. Let's just take a look here because it's also hedged. Let me just take a look. What is the CDR here? There's on the Globe and Mail. Yeah, it trades for like $31. Let me just pull it up here real quick and see if I can share it. So is this the CDR? So this is the CDR version. I got it shared here. So Google, for example, you can buy it for $25.78, but this would be like a fractional share. So basically what they've done is they've broken these shares down into smaller pieces so you can buy them on the Canadian currency in a much cheaper way. And I'm not a fan of this personally because I get that Google stock's expensive, but you don't have to buy it on the Canadian ticker. Like you don't even have to buy VFE. Like you can straight up, you don't need a US account. You can just take your Canadian dollars in your Canadian investment account and you can straight up buy the S&P 500 or Google, the ticker GOOGL or GOOG, and it'll automatically convert it to the US dollar and buy it that moment in the USD. And then when you sell it, it'll convert back automatically. I don't know why people have such a hard time buying, like just automatically converting currencies. And they get like VFV is just like a convoluted way basically of not buying it directly, but buying it through Canadian dollars. It's really interesting because I mean, it trades for 141 CAD, whereas you could just buy VOO, which is very expensive. It's $510 US. So you'd actually have to spend 510 USD to CAD right now. So, I mean, if you were to buy it outright, $730 roughly per share. So I feel like it's just kind of pandering to the broke people a bit more because, I'm not trying to belittle anybody. It's good to start anywhere. And if you can't afford a lot, yeah, it's good to cost average with a little and just get in the psychological framework of regularly buying. And yeah, if that helps you do it, so be it, do it. But I'm a person that, I don't like to invest a little amounts of money either. Usually my minimum investments are a couple thousand at a time. Usually I usually don't do I'm not a guy that's buying like $100 worth of a stock. If I am buying VOO, I'm usually buying like 4 shares of it at a time. Usually here or there. Then would you get charged exchange fees though? Yeah, depending on the bank. I mean, Royal Bank doesn't charge me exchange rate fees. I think Scotiabank charges about 1.5. I mean, there's risk of that, but honestly, this comes back to the point. So here's the thing in the long run, right? And this is the way I've always looked at it. And there's no guarantee the currency is going to continue to drop. But here's my thing. I've been investing for 10 years now, and I have mostly invested in the United States. And I will tell you, if you take a look at the last 5, or let's go out a little farther. I mean, if you go all the way back to 2010, let's say here, what would you have rather been invested in, the S&P 500 or the Canadian markets? Let's say you were scared to invest in the US and you just wanted to buy Canadian stocks. Look at the difference. I'm like, do you really care that you had to pay a 1% fee, a 1% conversion fee to get access to a 400% gain versus like 120 or 30% gain? Like, this is the way I've always looked at it. And then I've just been lucky too, right? Because I mean, there's no guarantee that the CAD's going to continue to drop. Because this is a thing that you got to be a little scared of too, right? Because I mean, if you're new to the market and the Canadian dollar starts to recover, you could start losing extra return. That is if you convert currency though. Like, I'm a guy, so this is like, I feel this is a problem for me talking to you about this because I don't give a shit about any of this. I'm buying things in US dollars. I'm making US dollars. I will not convert US dollars. Like, I literally make USD at my job and I will spend US dollars. I can pull it out of my US account. I can travel globally and spend US dollars. I can spend US dollars in Canada, Turkey, China. Globally, somebody's going to accept US dollars. I do not have to convert it. It's like just a way of a life to me. I'm like, I've even contemplated on opening up a European account and just making euros in dividends and having euros to spend as well, just to continue to diversify my currency income. Like, when you get to that level of investing where you're like, oh damn, like I'm not constrained to one currency. Like, it's so weird to me that we live in a world where it's like, I live in a country where, like, obviously I want to support the country, but I can literally make money abroad and keep that money in its currency and spend it in its currency. And I'm so blown away that, like, we exist in a world where that's possible while I sit here at home and I don't have to leave my house. It kind of blows my mind. Very, very interesting. F American dollars will drop. Yeah, maybe. I don't really care though. Like, obviously, like if there's a political comment, I just don't care. Like, I don't think Google, regardless, or Apple, regardless, care about politics. They're globalized companies. Yeah, they operate out of the US, but the politics aren't going to change me saying, hey, those are great companies. Like, regardless of politics, I'm still going to invest in where I think the best companies are. Thinking about going to safer yields, ETF, still a fan of VDY. So VDY is the one I go to, but if you want security, look at XEI, look at XDIV. VDY is highly concentrated. It's a market cap weighted ETF. So I wouldn't like solely put 50% of my portfolio in VDY because you're probably taking on more risk than you might be aware of. So just be aware of that. Canadian Pacific or CNR. Canadian Pacific's better for growth. They've done a lot better job expanding their railway, I think, into Mexico and stuff. Whereas CNR has kind of been dwindling a bit from the railway side of things. The CAD won't stay low. Like, this is an easy 70. Yeah, maybe. We don't know, though. If we go into a recession, which is still very likely and on the table, our dollar still might be hindered a bit. Just heard bad things about iShares management. Oh, God. Another thing you can diversify too, right? Like, I have shares with BlackRock, Schwab, Vanguard. I think Vanguard is the premium. But I also thought about this too. I'm like, do I really want all my money with Vanguard management? Maybe diversify a little bit more just to be safe. XEQT lost months of gains. Yeah, I mean, the markets are crashing though, right? Or not crashing, correcting, I guess. What do you think about Walmart? Walmart's been on fire lately. I don't like the food companies as much. They're really expensive. What's Walmart trading at today? I would be very careful because a lot of people like Costco and stuff, but I still think they're very expensive companies. Like Google, like I said, the market tells you where the value is, right? I mean, I think Google's just easy money to me. I think it's easy money anyways. I could be wrong. I think Take-Two Interactive might be easy money too, and I could be wrong. But yeah, I mean, Walmart's still trading at a wicked valuation, and same with Costco. They've corrected a little bit, but these are companies that will always trade at premiums. I just don't understand them to the level of like, do I want to pay a 50 times multiple for a company like Costco? I don't know. It's kind of tricky. I mean, the Qs, I think on average only trade at like a 29 PE right now or something. So, I mean, Costco alone is trading at like way higher multiples than even the Qs. And the scary thing is, right, like, and I've talked about this before, and I'll finish up on this note. You really want to watch out for what you think is a good company. And when you're buying individual stocks, you have to understand you're managing a company. And when you're managing it, you have to know when to let it go. And you can't just hold on to it forever. So there's a company called True North Commercial REIT. And this is a prime example to me because I remember I never bought it, but I know people that did. And over the years, let me zoom out here. Over the years, everybody was telling me, what a great REIT. It's government, it's mostly government tenants. It's been around forever. I mean, its history goes all the way back to like 2013. And the stock has been very consistent, and it was paying like a 6% yield back in the day. And everybody loved it. And then out of nowhere, the pandemic hit, and this company that was like one of the strongest real estate investment trusts in Canada plummeted, like massively plummeted from $40 a share to where it sits today at $9. It cut the dividend and everything. And I'm just like, this is the reality of investing long-term. Like, you got to be real careful in understanding just because it looks good today and it trades at a high value, you got to understand over 10, 20 years, like a lot of shit can happen to very good companies. Again, go look at the S&P 500 and what it looked like back in the early 2000s or back in the 90s. It doesn't look anything similar today. So you got to be aware of self-management. This is why like people get mad when I flip-flop in and out of stocks. But when you look at my performance is outpaced the S&P. Like, my flip-flopping works for me, doesn't mean it's going to work for you. And like I said, just don't blindly buy individual stocks. It's highly, highly risky. Comes back to the point, the most genius system ever invented was market cap weighted ETFs. It's not emotional. Like, I wouldn't have been smart enough to buy Nvidia. I regret that I wasn't smart enough. And I bought TSM and I accidentally sold it too early. But, I still made all those gains on Nvidia through the S&P. Nvidia was responsible, I think, for a huge chunk of the S&P gains over the last couple of years, right? So, don't be, you got to avoid your own stupidity. So just be careful with that. But yeah, I appreciate that you thought that was good advice. But stay cool. I blindly buy my ETF. Yes, exactly. Don't get caught up in the rhetoric of knowing the tops or the bottoms. Let the good companies auto-weight their way in and the bad ones auto-weight their way out. It's very simple. And then if you want to gamble like I do, keep an eye on, like I said, cost average into the many and focus on the few. On that note, stay cool, stay awesome, folks, and I'll catch you in the next one. Peace.